On behalf of Bruegel and the Peterson Institute, I would wish to welcome Dominique Strauss-Kahn, Managing Director of the IMF, and especially to thank him for making time in his very busy schedule today and over the weekend for sharing thoughts with us. I think we have two main reasons for being happy to have you with us today. The first is European and second is global. Before being an international civil servant, you were in a previous life a French politician, and you were Minister of Finance at the time of the introduction of the euro. You were instrumental in bringing France into the euro, and I can say that you were the father of the Eurogroup, the one who introduced the idea of creating the Eurogroup among considerable skepticism at that time, because you thought that there was a need for a forum to discuss beyond the rules and beyond the treaty. There was a need for a kind of European G7 to discuss economic situation. So I think it's very interesting to hear your views today about what has been achieved, how the governance of the euro has performed compared to expectation, and especially how it can perform in the current situation. We already had some discussion on that with some different views between Joaquin Almunia and Lorenzo Binismaghi. Almunia saying we need to improve the governance. The euro is not yet, EMU is not yet mature, and Lorenzo Binismaghi saying, on the contrary, we need responses, we need solutions, we need policies, but the institutional setup is yet at the level where it should be. Second reason is global. You're on record telling governments that they are not enough committed to coordination and cooperation, and that they're too much tempted by national solutions and even beggar-than-neighbor policies. And so, as we are looking forward to the meetings this weekend, it's especially important to hear you on that. I would say that yourself and the multilateral institution have been also criticized for not being forceful enough, not being clear enough about the kind of solution that would need to be implemented, and even Joaquim Almunia alluded to that in his presentation. So we're also very keen on hearing your views about what kind of coordination and what kind of responses we need in the present situation, and what kind of contribution the euro area can have to this problem. Thank you.
Well, good morning. Thank you very much for being here this morning. It's a privilege for me to attend this meeting in this busy day, and I want to thank Fred for inviting me and Jean for the nice word he just pronounced. As you all know, the situation the world is facing is every day a bit more difficult. And obviously in the coming days, and when I say in the coming days, it's really in the coming days, we certainly have some very difficult choice to make, and I think that we must start making them very soon, meaning this afternoon at the G7, tomorrow at the IMFC, in the following days. There's a lot of things which probably cannot wait for longer. Because of this, I will use the bulk of my time to talk to you about the IMF views of the crisis and implication on the global economy, and that's why I have to apologize in advance, spoiling this birthday of party on the euro by talking too much, and principally about the storm outside, even if it's not without connection, of course, with the euro. So I would like to use this gathering and as well as the annual meeting to discuss with you what we need to do. My belief, in a nutshell, is that we can solve the problem we're facing, but we need really to act quickly, to act forcefully, to act cooperatively, and that's the different point on which I would like to make some comments now. This week, as you know, the IMF has given its assessment on the financial markets and the global economy. Let's start with the financial markets. First, the numbers. Our estimate of the global losses is now around the $1.4 trillion, compared to $1 trillion during the spring meeting 6 months ago, which is a rather big increase, of course. But at that time, probably most of you do remember, the figure of 1 trillion had been considered by most as already too pessimistic. So probably it was, I don't know, but obviously now we're far beyond this figure. And probably half of the losses have been realized, registered today, so it means that there's more to come. And there's no way to consider that the losses in the financial sector due to the crisis originated in the housing market in the United States is now behind us. But beyond the question of the losses, we are now facing another kind of crisis, which is a crisis of confidence. And obviously the private sector cannot restore confidence on its own, but macroeconomic policy measures cannot restore confidence on their own, and piecemeal measures on the financial markets cannot restore confidence on their own either. So what we need today is some kind of public intervention which is together clear, comprehensive, and cooperative between countries. In my view, action should be governed by a few principles. Principle one is that government action must have a clear objective, so that effective oversight of how public money is used is possible. And it's not always the case. The objective of the different plans which are proposed are sometimes clear, sometimes not that clear. Principle two is that national plans need to be comprehensive, meaning providing liquidity, containing guarantees to depositors and assurances to creditors, dealing with distressed assets, and, last but not least, dealing with the question of recapitalization. And it's all the IMF experience, dealing with banking crises all around the world, even if those crises were not as big as the crisis we're facing today, that there's no way to get out of the crisis without having a strong action on recapitalizing the financial institution. Principle three is directly linked to what Jean just said, is that action should be coordinated when possible at the global level between the main actors, but also at the regional level. And of course, a very good example of the needed coordination at the regional level is the coordination at the European level. And I will make some comment further on this, but obviously coordination at the European level, even if it may have improved during the last day, is lagging behind the curve. And principle four is that all this has to be acceptable for citizens, means that taxpayers should be able to share upside risks once the crisis passes. So how can we try to apply those kind of principles in practice? I would like to highlight at the point where we are today a few set of actions. First, as many governments have now concluded, the fragility of public confidence is such that some explicit guarantee of the financial system liabilities is unavoidable. But this goes now further the question of retail banking and blanket guarantees. Probably we need today some kind of guarantee of the interbank market and also of money market deposits, so that activity may restart in these key markets. Of course, such kind of measures have to be temporary. They have to include safeguards such as heightened supervision, limit on deposit rates, and this kind of things. But something as new and probably I hope so, as strong as an action on interbank is today, interbank credit is today necessary. Second set of action, government probably need to take out troubled assets and force recognition of losses. It has begun not only in the United States, but also in other countries, including Europe. The question is, at what value should those assets be purchased? And of course, the good answer, in my view, is to say it has to be purchased at a fair value. Why? Just because transparent bank recapitalization and restructuring of the balance sheets is essential to the process. So if capital is to be attracted to banks, it's better to pay a lower price now, recognize losses, and give bank an upside if the losses turn out to be smaller than expected. If we do it the other way around, then it's very difficult to know what kind of balance sheets we will have for the bank, and so probably will be not that simple because the losses will not be totally recognized to restore confidence. Third action, it's clear that the private money is scarce today, and therefore government money is needed. So one strategy which has worked in past crises, and again that's the IMF experience, is to match new private capital subscriptions with government capital, which of course imposes a market test for the use of public funds. And fourth, I just talked about cooperation. We obviously need a high degree of international cooperation. It's urgent. During the past week, the collapse in confidence in markets has been almost matched by collapse in confidence between countries. I see a very bad trend toward unilateral measures taken with national interest in mind. Maybe we are at the beginning of a turnaround in this. The ECOFIN agreed on some principle, and I understood that Joachim made some comment on that. Wednesday, the coordinated moves by the central banks was coordinated, and I think there's still room for some cut in interest rate. But really, I think we all have to urge the Europeans to work together. Obviously, there's no domestic solution anymore, even if it has been possible to imagine in the near past that a domestic solution were possible. I know for Europeans how difficult it is. As Jean kindly said, I've been part of the launching of the euro, and at this time it was not more difficult than it is today. Today it's even as difficult, or even more. The coordination among Europeans includes more countries than at this time, and even if they have the finance minister have today in the I was to say in the United States, but I wanted to say in the European Union, have some experience of working together, making decision. Tough decision is probably the most difficult thing in this kind of environment. So I know how difficult it is. But it is obviously the price of success. All kinds of cooperation have to be commended, and all kinds of lonely acts have to be avoided. We have all in mind a lot of examples, the most significant one or the most illustrative one being the blanket guarantee in Ireland, but there can be other examples to show that uncoordinated action doesn't lead to good decision all across the board. So having said that, how is the financial turmoil affecting the global economy? In spring, IMF forecasts were considered as too pessimistic. We were obviously below the consensus. We have been criticized a lot for that. Maybe we were too optimistic. Obviously, we were too optimistic, and the forecasts we have today are much worse than the one we provided 6 months ago. What we are saying today is seeing a global economic growth at around 3%, which the breakdown of which is a 0% growth for advanced economies and something around 6% growth for 6-7% growth for emerging economies and low-income countries. So that's rather bad news, even if the good news is that we also see the beginning of the recovery in the second part of 2009, at the end of 2009. So it means that it's still 1 year from now, but we don't see the slowdown to be more protected, more longer than the first last semester of 2008 and the first semester of 2009. What is important, among other things, is that all growth, with an average of 0 growth for advanced economies in 2009, means that all growth will come from emerging market economies, even if for them also the rate of growth in 2009 will be a bit lower than the one of 2008. It will have a lot of consequences in the future. It will have a lot of consequences, namely because it shifts a little the power and the distribution of power between advanced economies and emerging economies. And I do believe that when the crisis will be over, in 1 year or 2 years from now, this fact that all growth in the world in a large part in 2008, all growth, as if we follow our forecast in 2009, I don't know how much in 2010, but obviously a big part of it will come from emerging countries, will be something we cannot forget, and that emerging countries will not allow us to forget. But the financial turmoil may also have some longer-term effect. I do believe that in the US, the new generation will have fresh and vivid memories of the financial crisis, which probably induce behavior where they will be more cautious, taking less risk, which is not per se a bad thing. But this change in attitude toward risk will reshape, or may reshape, the patterns of consumption and investment. And of course, this has consequences for policymakers, because if both investment and consumption fall, because savings increase, then there may be some need for fiscal policy, even if fiscal policy, we know, is constrained and will be constrained by the increase in debt due to the rescue of the financial sector. So the question of what can be the new macroeconomic equilibrium in the coming years if the crisis has influence on behaviors is something that we need to think since now. If we look at the European Union, it's obviously that the countries have been hit as hard as the US, partly because of the valued appreciation of the euro. And I would like to make one point which is relevant to the subject of this conference, which is that we haven't seen an exchange rate crisis yet. I do insist on yet. But until now, the crisis has been a crisis in domestic banking system, and maybe if 1 or 2 years ago an audience like this one was in the same room and somebody had asked, let's imagine that the financial sector will have losses around $1.4 trillion, what could be the consequences on exchange rate? Many, if not all, will have said, okay, there will be some consequences. We haven't seen them, at least between the euro and the dollar, some changes, couple of percent in one way or the other way, but nothing which looks like a crisis. Why? Obviously because of the existence of the euro. Let's consider the last year without the euro. If past is any guide for the future, we can imagine that the pressure would have been different toward the Deutsche Mark and the other currency, which means that following what happened in the past, the Deutsche Mark will have appreciated much more than the euro today, and so it means that for other countries, political, business forces would have lined up in favor of devaluation. And market participants would have left country at risk of realignment, driving up interest rates and spreads, and at the end of the process, exchange rate realignment would have been needed in turn, with consequences on the inflationary pressures in the countries that have devalued. So all this disappeared, but it's not so far behind us, and certainly there's no question for me the euro has contributed to the stability, becoming one of the essential elements of the global monetary system. I made previously a small comment about the emerging countries and the fact that will represent almost 100% of global growth next year. Let me go a little further. It's true that all growth, almost all growth, will come from emerging countries. Now, it doesn't mean that they have not started to be affected by the situation. The so-called decoupling theory, which was very in the mood 6 months ago and a bit disappeared today, explained that for a lot of reasons, what happened in advanced economy will not have consequences or very small consequences on the emerging economy. We're always having fighting against this idea, and obviously not only in terms of growth and the consequences of diminishing trade because of the slowdown in advanced economies, but also because of a cut in credit lines and especially trade credit. We see now that those economies are also at risk. Some of them, many of them, are in much better position than previously. They have large reserves, they have solid current account positioned, they have healthier banks than previously. But the large group is very exposed due to external financing needs. And so the policy responses, of course, have to be tailored depending on the circumstances of the different countries, so I'm not going to elaborate a lot country by country, but it's at least possible that some emerging economies need help in the coming weeks or in the coming days. And that's why I have activated 2 days ago the emergency procedures in the fund, which allows us to respond much quicker than in normal times. Before concluding and taking some of your questions, if you have, I would like to underline two other points. The first one is that we're all dedicating 90% or 99% of our time to the financial crisis today, because it's obviously the main question we have to face. But we shouldn't forget the other crisis. The other crisis is the crisis which comes from the increase in fuel and food prices, and even if those prices have eased during the last period, and that even if our forecast is that in the coming year these prices will, let's say, stabilize, the stabilization is at a level which is higher than the situation we were facing before the increase. So it means that the bill, especially the oil bill, but also the food bill, for many countries, low-income countries, is still very, very high. And our estimate is that there's around 50 countries at risk today, with high inflation, over 13% of inflation, with high current account deficit, at least forecast of current account deficit, and with a rather high cost on the fiscal side because of the subsidies or the tax cut which have been made to help people to accommodate with high prices. So we try to help them in several directions, helping them to have more targeted subsidies to the poor, not having across-the-board subsidies. We try them by financing, and we already increased our financings to 15 of them, and there are more in the pipeline. We just reform our exogenous shock facility, which is now organized in a way which can be used more easily and more rapidly by the low-income country. But there's one point on which I would like to put some stress, which is the question of the donors. Last year, a lot of pledges have been made by donors, mainly advanced economy, to help accommodate the situation in low-income countries facing not only the increase in oil prices, but also the increase in food prices. And what we see today, for a reason we can understand, because of the strain on the budget in those advanced countries, the money is not coming. So a lot has been promised, but the money is not there. And of course, anybody having had a responsibility in his own country understand that he has to deal with domestic pressures, and the first thing which is easy to cut is aid to foreign countries, especially to poor countries. But on the other hand, we should not respond by cutting this kind of aid, because if we do that, we're going to increase dramatically the problem we're facing mainly in Africa and some other poor country in Asia or in Latin America. And when the crisis will be, the financial crisis, will be enough behind us, we will be facing increased problem or huge problem in this part of the world. The second point I wanted to underline before closing is that we need to look beyond the crisis. And I think even if we're in the midst of the crisis, it's not too early to try to draw some lesson of the crisis, because the lessons are helpful to get out of the crisis. And I have in mind two kinds of lessons. The first one concerns, the first set concerns regulation and supervision. The FSF has done a lot of work, good work, partly with input of the IMF, input of other bodies also, central banks, different kind of institution. And I think what has been done by the FSF is very useful. But it's not enough. It's not enough. Why? Because, in my view, we're facing three kinds of failure. A failure of the regulatory and supervisory framework in advanced economy. We're facing a failure of risk management in private institutions, and we're facing a failure of market discipline mechanism. And we have to go further to address these three kinds of failures. And I don't have a lot of time now, but at least I would like to insist on 2 or 3 points. We need more flexibility, less pro-cyclicality in Basel II. And the norms which have been established obviously have a pro-cyclical effect that we need to correct, including the question of the fair value. Point 2, a lot have been said about rating agency. I don't want the rating agency to become kind of a scapegoat of the crisis, but it's true to say that they have to adapt to new complexity of the financial sector, to limit conflict of interest, and to accept some kind of supervision. And point 3, we certainly have to close loopholes and fill information gaps in the financial supervision and regulation. This includes looking again at the regulation for covering securitization, private equity companies, and all the mechanisms which may be used to increase leverage, because at the end of the day, the crisis is a crisis of leverage. And this has to include a look, a new discussion on the way to deal with hedge funds, probably through their counterparts. So in all this, I think that the IMF can help. Why? For 2 reasons. For 2 reasons making the IMF a unique institution in this situation. The first one is that it has a universal membership, some skill in financial diplomacy, which has been shown recently with the Sovereign Wealth Fund report. And this universal membership is absolutely necessary. For the reason I said before, there is no way today to find a solution to the crisis within a group of advanced countries and letting the emerging countries outside. They're already reacting to that. And that's why everything which can be done in the regulatory framework, on the regulatory framework, on the supervision, all this kind of thing has to be shared by other countries. The problem is the problem of ownership of those reforms, and it's impossible to hope that reform which will be decided by a small group like the G7 countries or the G7 plus will be easily accepted all around the world if we don't take into account all those countries. So universal membership in an institution today, it's absolutely necessary to be able to face a global crisis with global solutions. The other reason is that we have the machinery for follow-up through the Article 4 consultation, the surveillance mission that we have, the FSAP that we are carrying on, even if those FSAP have to be renewed. And again, it's nice to provide new rules, new analysis, to advise for new behavior, but you need a system of surveillance of that, just to check the implementation of those changes, and the IMF is certainly the institution having the capacity of doing this kind of surveillance. So that's why I think that as far as the lessons in regulation and supervision are concerned, a lot have still to be done, but the IMF is ready to be helpful in the implementation of that. And the second lesson has to do with the financial architecture. Maybe you have a feeling of déjà vu in listening to that, because any crisis, at any crisis you have people having a lot of good ideas to reform the financial architecture. I remember during the Asian crisis there were a lot of ideas on the table, and so I'm not surprised that today there's again a lot of ideas how to reform the financial architecture. And everybody has his own point of view. Bob Zoellick, last Monday here, have an inspired call to a new multilateralism, and I think what he says is very sensible. But the problem is that it's rather easy, and I'm not saying that about Bob and other one, the critics, I can critique myself in the same way. It's rather easy to provide some ideas of how the new system should be. The problem is how we go from where we are to this new system, and that's much more difficult. But if we look at the needs, I would try to put them under two ideas. The first one is that we need more legitimacy in the architecture, and the second that we need more effectiveness. More legitimacy is directly linked to the role of the emerging market economies. The fund, and I'm proud of that, is probably one of the first institutions, it may be the first one, which have moved in trying to reform the way the emerging economy and the low-income countries were represented. That's the quota reform, which is still ongoing. I know that a lot of people did consider, and probably do consider, that it was not enough. I think they may be right, but they shouldn't consider that what has been done 6 months ago was the end of the process. The first step of a process, which is a dynamic process, which has been established, and so over time, of course it takes time, but over time the change will be a big change in the quota and voice representation of emerging and low-income countries in the IMF. The second thing we're doing is dealing with governance question, and a report has been produced inside the fund. I just asked an eminent person group led by Trevor Manuel to think a little out of the box, to new ideas for governance and the fund. I'm going to have some outreach with a civil society organization to discuss about that, and we're really committed to work in the coming 6 months on this question of governance. But of course, when we think about architecture, the question is not how this institution or this institution is managed or governed. The question is, which everybody has in mind, the game on which everybody is playing, is what should we do with the Gs. And everybody is arguing that we should extend the G8 to something. Some are arguing G11 plus, meaning the G8 plus China, India, Brazil. Some are going further, G14, then very close to the G20. All these ideas have some rationale. The question is that it's certainly necessary to do that. I do approve, for reason of legitimacy. The question is, at the same time, you have to deal with the question of effectiveness. And the question of effectiveness is that all this meeting of the Gs are just useless. You have meeting, people talk, it's better than not talking. But what comes out from that? Boring communiques? Nobody read the communique, hopefully? And no decision, or some decision are made, but no follow-up. And so what we need to do is not only to restore the legitimacy of these leading groups, but also to restore the effectiveness. It means, in my view, two things. Simplification of the system. We have too many organizations, international, multilateral institutions working on the same topic. Let's take development, for example. We have a leading institution, which is the World Bank, some regional institution, but we have also a lot of other institutions working very well. What they do is very useful. I'm not criticizing what they're doing, like UNDP, for instance, or other institutions like this. And the coordination of this, by itself, needs to waste a lot of time. We certainly need some simplification of the system. But more of that, we need the institutions, each and every in its own domain, to work as a secretariat of the decision made by the group of ministers, the G14, the G15, whatever you call it. Because if not, you have no follow-up. All of us, having had this kind of responsibility in the private sector or in the public sector, know that a commission, a committee, without a secretariat, without somebody to prepare their work and then to follow up, it's just something which wastes time. And that's why I think we're now at a point where if we want to reform the architecture, we need to go much further than only enlarging, which is necessary, the membership of those groups for legitimacy reasons, but we also need to make them much more effective in having some force to follow up what decisions are made, to report on the way it has been done, and just to work as any private or public corporation will work when they have goals, timeline, and results to be obtained. So I will stop there. I have been already much too long. Obviously, the time is a time of serious challenges, and the good part of it is that when you have serious challenges, you can think a bit imaginatively. You can have some idea out of the box, not too many, but you can try them, and certainly in the situation where we are. But then, very rapidly, we need to act boldly, and we cannot just expect that things will come back to business as usual easily. So I hope that those kind of discussion will take place this weekend at the annual meeting from the World Bank and the fund. Also this afternoon and tonight at the G7 meeting and dinners, and that this 2 or 3 days will be helpful to make steps forwards, not only in the resolution of the crisis, but also in trying to make the first step. Let's be cautious, but make the first step to reorganize the system in which we are, which obviously is a system which doesn't work very well. Thank you.
Thank you very much for this wide-ranging presentation covering from the next days to the long term, from the advanced countries to the developing countries, and from action plans to architecture. So I will open the floor. We have about 15 minutes. I think Fred would like to ask the first question. I will have a question, then there will be many.
Mr. Managing Director, I thought this was a brilliant speech. I have heard and, in fact, hosted many speeches by managing directors for many decades, and I think this was the most thoughtful and important call to action that I have ever heard from your position. I congratulate you on it. I want to underline your proposals for dealing with the immediate crisis, where you called for agreement on explicit guarantees of financial system liabilities, taking out bad assets and clear recognition of losses, and governments to match private injections of capitalization to recapitalize banking systems. Those three steps, it seems to me, would go a long way to restore confidence and deal effectively with the current crisis. You have made a persuasive case that the IMF is really the only possible institution to take the lead in this process, and you've provided the intellectual lead today. But all the reforms you talked about to put the IMF in an optimum position toward the end of your speech take a long time. So I want to ask you an immediate operational question. What do you need from the G7, from your IMFC, from all the assembled leaders here these 2 or 3 days? What do you need from them to start implementing the program that you outlined here and assure that the IMF will both be in the leadership position and be seen worldwide, and hopefully restoring confidence as a result in that position? What do you need in the here and now, real time, to put this in place?
Well, an easy answer without enough humility will be we need to be listened to. Behind the scene, the IMF during the last 6 months, 8 months has been providing advice. I think those advice were good, but maybe they were wrong. It's a discussion, of course, to governments, including the US government. And because we did that behind the scene, because we thought that our role was to help, to be helpful, not to to add problems to problems, the institution has been criticized saying, where are you? We don't see the IMF doing anything. So it was kind of a very difficult position where if we go public, we may just make it more difficult at this time for the US administration, and we don't want to do that, not our role. But if we don't go public, then people are saying you're just sleeping. So, okay. We have been partly listened to. I think that we have been arguing, when I say we, of course, I'm talking about all the staff of the IMF. We have been arguing very soon for comprehensive global solution and avoiding piecemeal action. But I can understand that any government, when he sees the first wave, say, okay, I can manage with that, and then the second wave is a bit bigger, but we managed the first one, so we're going to deal with the second one. And it's only when the tsunami really comes that you say, okay, we need a global and comprehensive solution. So I can understand the process. Nevertheless, I think that what has been done correctly, I think, and hopefully it will work, I think it will, during these last weeks, could have been done a bit earlier. And that's why I advise the European governments to take advantage of this experience and to move fast. But nevertheless, that's not an answer which is enough. What I need is, what I will try to do, is to convince the finance minister of the G7 this afternoon and the finance minister of the 24 finance minister of the IMFC tomorrow morning to begin drawing the lesson. And beginning to draw the lesson is ask the IMF, or it could be somebody else. I mean, that's not really the point. I think the IMF is well fitted to do that, but could be some other institution to draw the lesson, because what I'm afraid of is that we will more or less succeed, more or less rapidly succeed in fighting against the financial crisis, and then it will be behind us, and when it will be behind us, people will think to something else, and all this problem will be forgotten and postponed to the next crisis. So what I really would like now is that the leading bodies, the leading person of the financial community decided that it's time to have the first set of lessons, then we may discuss them, and it can be a process which takes some time, but at least we have to start very soon, and that's what really I'm expecting. So, 2 things, again, with due humility, to be listened to on the different point you were explaining, recapitalization, mostly recapitalization, dealing with the troubled asset, but it comes after the question of recapitalization. Restoring confidence, even if it's necessary on the interbank market. So that is what I would like to be listened to. And second thing, to be in a process where all what has happened is correctly analyzed. We never will avoid future crises. Future crises are always different from the previous crisis. So past is not enough to avoid problem in the future, but it helps. It helps.
Quick question on my side. You emphasized in your presentation that the solution is not only with the G7, that it has to involve a broader set of countries, but at the same time the action plan you outlined was mainly for the G7. What concretely do you expect from the other players?
Well, you're right, but a little correction. It's not only for the G7. There's other countries, Switzerland, Singapore. I can make a rather long list. You know the list of countries that are not in the G7, which are big financial markets and which need to be in the process. But it's right to say that even this list will not be a huge list of more than 100 countries. So what we need to do is to work with a group which is larger than the G7, which is close to the group of the FSF, but even larger than the group of the FSF, because even if most of the proposals made by the FSF and endorsed or proposed sometime by the IMF concerns mature markets, they have consequences in other markets. And global banks today work as well in UK as in India or in Brazil or even in China. And so you can't have different kind of regulation. This kind of loopholes are exactly the way paving the way to new problems later. And that's why you can't rely only on proposal on new regulation and ask national legislation to implement it. You need to have a surveillance process. You need to go there to send people, 10, 20, 30 people staying 3 weeks, 4 weeks to make an assessment on how correctly those measures have been implemented. And that's why I think that the normal institution to do that, because we're equipped to do that, is the IMF. In all the, well, not maybe in 185 countries of the IMF. There's small countries where you don't need to do that. Of course, we have a long list of small countries which are not systemic. But the number of countries in which we need to do is probably far beyond the 40 or 43 FSAP that we're doing today. And I would say a guess would be something around 70 or 80 countries.
Okay, I give the floor to Norbert Walter then.
Norbert Walter, Chief Economist of Deutsche Bank. Wow, the IMF is back. Second, Columbus may save the New World and the Old World, or Columbus Day may save the Old and the New World. Monsieur Strauss-Kahn, I just addressed the emerging market, less developed countries. I felt the disconnect of your qualitative statements and the quantitative forecast. I view a contagion effect of not the small guys, but the Turkeys, the Brazils, the Koreas. I see that there might be either a meltdown of commodity prices or an inflation problem for exactly the countries we have in mind. The remittances of other countries in the emerging world now are in tailspin. If the US construction sector is cut into half or cut into thirds, Mexican workers won't send remittances back home. And who has looked into that? We are looking into manufacturing sector instead of all these transmission channels that are so important. Who cares, damn it, about the real estate bubble that is bigger than anywhere else in the world in the Middle East? These are considered to be the rich guys. They may be wrong about themselves. So how to get the connect between the qualitative statements and the quantitative forecast of a 3% growth of this part of the world?
Thank you. Let's take one or two other questions. David March and Ted Truman.
Yes, thank you very much. David Marsh from London and Oxford. I'd just like to apply your principal themes of effectiveness, legitimacy and boldness to EMU. There's a hole in the heart of EMU in that there's a lot of M and not much E. So is it inevitable, do you think, given the present crisis, that in the next 2 or 3 years the EMU countries will have to set up something that carries the name gouvernement économique if this system is to have a long-term chance of not just prospering, but surviving?
Ted Truman from Peterson Institute, Mr. Managing Director. My question is actually partly on Norbert Walter's theme. You have an outlook which is, for the world, that is teetering on the edge of global recession. Indeed, probably if your outlook went to bed today, it would have a global recession in it, quite frankly, I suspect, knowing this process. But in your remarks, you seem to focus on the financial system and not on directly attacking the global recession. And my concern, actually, is that for some of the same reasons that Mr. Walter said, my concern is that now we're in the global recession or on the edge of it, right, and just addressing repairing the financial system, which is clearly needed, is not enough to repair the global economic system going forward.
Thank you. You're not going to be able to take a second round of questions, so I have a last question over there, please.
Dorothy Barandas of DB Media. Monsieur Strauss-Kahn, thank you very much for your wonderful speech and remarks. You just mentioned Basel II and improvements or changes. Can you go a little bit more in detail, and what do you recommend to the Americans regarding Basel II? And secondly, this afternoon, the finance ministers, you said they should draw a lesson. So what exactly do you mean, and what would be the best case scenario for you this afternoon and results at the IMF and World Bank meetings this weekend? Thank you.
Well, on your first point, it's true that we still have rather resilient in our forecast emerging economies, and it may be somewhat surprising. Your point is exactly the opposite point from those saying a few months ago that there was decoupling. So you were surprised, if I understand well, that the emerging market economy can go in our forecast that well. In fact, it depends a lot. It depends a lot where you're looking. Some emerging economies are benefiting from the increase in prices of oil or commodities. Some others are suffering. Some are net importer of oil, some are not. Some are net importer of food, some are not. So it's very different cases, you know. But you're right in saying that this average of growth is an average of growth in emerging market economy, which have very different components. We still see a growth in China around 8–9%, which is less than the 11% they had before, but it's still 9%, so it's rather high. And of course, it has a lot of influence on the average, even if for some other economies the slowdown is much more important. But the trade channel or the impact of the slowdown in the United States or what's happening in Mexico, for instance, is one channel. This channel did work for 1 year. What is probably new, and that was the point I wanted to underline, is that for some weeks, it was not the case before, those countries are calling us, saying we have problem in financing. We rely a lot, not all of them, some of them, are relying a lot of capital inflows, and those capital inflows are drying up. So a large deficit of current accounts which were financed by capital inflow and FDIs are just disappearing. So in a few number of weeks, the IMF, which was not lending for a long time, may come back in business on this part of his business. I'm not happy with that, but it is the case. And the point is that there's a lot of differences when I was talking about emerging markets as a whole. It's certainly misleading because there are very much differences among this between the different countries in the emerging world. the question on the EMU and the gouvernement économique, you seems to be too much influenced by French ideas. I'm afraid it's a very bad point. Well, I myself have been arguing for years that we made a first step with the single currency. That was needed. Okay, always being an advocate and a strong believer, a supporter of the Maastricht Treaty, but that it was not enough, and that I knew no country with a currency and not an economic, a finance minister, and somebody in charge of the economy, and that we were building this kind of institution where we will have a very strong central bank, no problem with that, but in front of that, no real person in charge of the economy. I remember a discussion with Theo Weigel, who was at this time the finance minister in Germany, and he was very much opposing this idea of the Euro group, which as John just quoted, which in my view was the starting point for having this gouvernement économique. And I told Theo, look, you are meeting Hans-Dieter Meyer every 2 weeks, 1 week out of 2. You have breakfast. And you're not talking only about bacon and eggs. You're talking about economic policy. So the independence of the central bank is not at stake when somebody is discussing with the president of the central bank on what we should be done as far as interest rate is concerned, liquidity, and this kind of things. So we need that. A step forward has been made with the leadership of Jean-Claude Juncker, and that's very useful. But we're still far away from having this gouvernement économique, and in a crisis like this one, we see that it's very difficult to make decisions. It's very difficult to make decisions because you don't have a centralized power, even if it's with subsidiarity taking into account with what has to be done at the federal level, what has to be done at the state level. In this country, you know very well what it means. We can try to implement something which looks like the federal system in the United States, but we need to have at the center of the system something which is able to make decisions, which obviously is not the case. And I don't know how strong Joaquin Almunia early this morning was advocating that the very big decision has been made by the ECOFIN, but I'm afraid that between the speeches at the ECOFIN and the reality of the European economy, there still will be a large distance. To Mr. Truman, yes, we're at the cusp of a global recession. I mean, you have to say things as they are. And you're right in saying that I spend most of my time talking about the financial sector because we're just in the crisis, but for another reason also, which is that I believe that the traditional policies, monetary policy, fiscal policy, just don't work since confidence is not back, and until confidence is back. The experience we have in the IMF of this kind of crisis is that you can do what you want. I'm not saying it's not useful and you shouldn't do it, and I say that in my remarks that there's certainly some room for going forward in cutting rates. But the influence of that is rather small until the time where confidence is back and markets are working normally. That's why the first step to make is really to restore confidence, then, which means to deal with the financial crisis. But nevertheless, you're right. You're right in saying that behind all this, what we have in charge is the real economy. The financial crisis hurts a lot the real economy. We see that in the forecast, and not only the forecast, in the results for 2008. And so we need to react. Maybe you remember, I probably was one among the first. It was Davos in January this year, asking for fiscal stimulus wherever it was possible. Some countries don't have room for any kind of fiscal stimulus, but the US had, for instance, and I was supporting the fact that they use it. Some other part of the world also had some possibility to use fiscal policy, and I think it was necessary because 9 months ago, it was clear for me that the question of the financial crisis, which at this time didn't appear as big as we see it today, was one thing, but that behind that, the real stuff we had to deal with was the question of managing the real economy, and managing the real economy comes back to our traditional tools. But really, I think that those tools will be effective only after some confidence will come back. When you have a frozen market, as we have today, no one wanting to lend to anybody and all the financial institutions staying at home without taking any risk anymore, you can change a lot of parameters in the monetary policy without having any kind of result. Basel II, well, I'm not going to make the reform and create Basel III immediately in front of you, but look, this very controversial question of accounting, mark-to-market. The way it's used in the United States is rather different from the way it's used in Europe. And the criteria to have some asset in the box mark-to-market or in the box hold-to-maturity, the rules are not the same. So at least this kind of things could be done without hurting, without a kind of revolution, just to say that if you have more facility in the United States than in Europe to put in the hold-to-maturity box some assets, you should have the same in Europe. And maybe this level is even not enough and should be increased, or the flexibility should be increased on both sides of the Atlantic. So there's different kind of thing like this, which was what I had in mind as I was talking about pro-cyclicality, which we should look at very carefully to be able to adapt the rules. I'm not at all saying that we have to get rid of Basel II. I think it's a very important improvement, but it's an improvement which has been made in a period where we were not under stress, and we have to adapt it looking at the stress we support now. I'm going to disappoint you, but I won't tell you what I'm expecting from this afternoon or this evening meeting, just because there's no use to raise expectation. I think, really, I was a bit ironical previously about the G7 saying that just talk like this. It's not totally true. And really, I think, having talked with some of the members already this morning or yesterday evening, that the sense of the gravity of the situation everybody has in mind. And so maybe we will have this afternoon and at the dinner tonight a meeting which will be with more content than the discussion we sometimes have. And already Hank Paulson decided to change the agenda. You had an agenda, the traditional things on climate change and all this kind of thing. I'm not saying climate change is not important, but maybe it's not really the more urgent thing today. And so all those things have been removed to give more room to discussion on the current situation. So I think that everybody has really in mind that we need to do something. And so even if I don't want to raise any kind of expectation, it's really possible that finally something will come out from this meeting. Thank you.